All right, what is going on, Discord and YouTube family? Welcome back to another edition of Market Review with me, T. Hobbs. Uh, man, today on the channel we're going to be discussing the breakdown of the S&P 500, the Nasdaq, and the YM and Volatility Index. It was a crazy week in the markets. I don't do market reviews on Fridays. I like to just kind of rest, although I wasn't doing much resting this weekend. This Friday, I was definitely working. But normally I like to come in and do a longer market review, not only discussing the previous day's price action, but looking to see how our weekly projections kind of played out. Now, there ended up being a lot of price action. I mean, we went from, what was it, Sunday we dropped down, as you guys know, almost like 3%, tapped into the 3-month fib, and then rallied like 10% in one day on Wednesday, only to come down another 5% and then kind of consolidate out on Friday. So it was a crazy overall week, but we're going to try to break down a lot of that price action, talk about a lot of these levels that we had that ended up working out pretty nicely when we review them. But first, we're going to go over the pre-market plan for the S&P 500, and then everything in regards to top-down analysis. I'm going to talk about only on the S&P 500 because I just don't want to do it repetitively. So it's gonna apply to your instrument as well if you just follow it, right? And if you have any reference points or any questions, I refer you back to the top-down analysis video where these exact lines are on my chart. I just take them off when I'm trading because it's just a lot of information, right? All right, so as far as Friday goes, the current conditions, I said we were ranging at the low of a downtrend. And you can see that held true all day until like the last couple minutes or last hour or so where we finally broke out of the range. But essentially, we were ranging at the lows, right? We were bullish as long as we stayed above 51.46. And you can see that was the previous day low, and we definitely stayed above that. So we remained bullish. We were bearish the closer we got to 53.79. And you can see every time we got near or above 53.79, the bulls just could not bring price that much higher, right? 53.79 was the previous day high, right? Or 53.86 or whatever it is, right? Basically, in this area, the market just refused to trade higher, at least for Friday, right? So I said bulls rally price back up after bears attempted to break the structure. Whenever the bears fail to break structure, that means that we're supporting discount, right? Like, and I'm going to show you on the three-month chart why this is like super discount, right? But anyway, bears attempted to break the structure. As long as the previous day low holds, which it did, I want to look to participate in longs until we reach the 4-hour supply at 56.4650, right? That plan is going to be the same thesis coming into Sunday, right? The market is continuous. If this was my plan on Friday, it's going to be my plan on Sunday, right? I'm looking for continuation into this supply zone, okay? When we get up here, that's when I'll look to entertain shorts. So we'll see, right? But ultimately, my extreme level, the bearish plan at 56.46, still hasn't gotten hit. It'll probably get hit next week, to be honest. I mean, we're looking pretty bullish. So this will probably get tested. We got this volume imbalance right here, or in dog, or gap down, whatever you want to call it. Like, this area is going to get tested at some point, right? Our PM session range was 53.73, 53.15 through the high, 52.16.25 through 51.46.75 at the lows. The lows never really got tested, but the high definitely held. And one thing we look for is a break and retest above the highs. But there's something that I did incorrectly that I'm going to show you. And rather than fix it, and fake like I had it, I'm going to show you what I did wrong and where my charting may have been a little off that would have got me a better thesis on my chessboard. But I'm gonna go through that here in a second. And then my bullish plan never got triggered, right? We were looking for 4-hour demand at 549, 99, 50, 48, 74. When it looked along the market targeting the weekly settlement price, right? We never really got down there, so this really didn't come into play. But there are levels that did come into play before I come down to the smaller time frames that I wanted to talk about on this time frame. When we do our top-down analysis, right, which I will conduct again, right, on Sunday, right? When we do our top-down analysis, when I mark out the weekly projections bearish and the weekly projections bullish, you can use them based on the context of where price is at. Before I go into these levels, I'm going to zoom out I'm gonna show you where price is at, right? And again, this is gonna be a longer video because market reviews on Saturdays, I got a little bit more time. We look at this 3-month video, this 3-month area right here, right? This is major discount price, right? Like this is basically the EQ of this entire rally right here. When I say EQ, I mean it's the middle point of this 3-month rally. If these buyers want to defend, they have to defend this area. All right. I think I said that I said that in my top down analysis, excuse me. But this level had to be defended, right? So if we were to just mark a line at this level at 49, whatever this is, right? Oh, wait, I did do that, right? Let's come down to this level. We come down to the 4-hour, right? And you can see I have a 3-month fib right here, right? This is 50% of the 3-month, the quarterly cycle, right? Like this level is very, very important. If we get below it, it's going to be the night level, guaranteed 4,900. If we get below it, okay? But let's review what price did starting from Monday. We'll get to yesterday's price action. It was boring anyway, but I think it's more important to review the top down so you understand what I be saying when I talk about this on Sunday. On Sunday, I said, I'm looking for the market to gap down. If the market gaps down, remember, I was still bearish down here, right? And I was bearish for a good reason, because when the market closed, it closed at 50.95. We ended up gapping down to 48.34. So I was still bearish. The market dropped 200 points. I'm not bearish anymore. Why? Because it accomplished the goal that was making me bearish. I thought that we had a good chance of tapping into this dealing range in this 3-month fib, which was another 200-300 points away from that level. So that's why from that level, I was still bearish. You'll hear me say that in the video. But I said, depending on how they deliver this, I could turn bullish really quickly. We gapped down right at 1,800. That's exactly what I wanted to see. When I saw that, I said, I'm going long, period, right? I don't trade the Tokyo Open usually unless I see something that I really like or I'm available. Usually I'm not even available to trade this, right? But if you look at how the data levels that we discussed, right? Because, we pulled these levels. This weekly projection was from the top of the range at 51.91. This one was from the daily fib at 52.47. And this one was 52.80 from the top of the range. All of these were about 5.1, 5.23% down, right? If you look, the gap down was exactly 5.36%. You think that's a coincidence? Or do you think that they were targeting the bearish data projections so that they could then turn around and go very heavy back to the upside? Hence Wednesday, we got a 10% move to the upside, right? When you understand the context of the market, right, like it doesn't feel as random anymore. When I saw this, and anytime I see this, I tell the Discord every time, I say, hey, if we hit these weekly projections Monday or Tuesday, stand by for a big move Wednesday, Thursday, and Friday, okay? And you can see Monday, we tapped into these levels. We retested them Monday morning. We tapped into the 3-month fib, right? We tapped into the weekly projection. We pushed through all of this, came up to the bullish projection, right? There were more. I just deleted them. I don't know why. I think they were just in my way and I forgot to re-add them. But we came back to the 3-month level on Wednesday in London, right? This is where, like, if you guys are in the Discord, you'll see Pip or myself sometimes. When we're trading London, we're trying to get the bottom because we already are looking at the daily, we're looking at the weekly, we're looking at where we're at on the monthly and the 3-month, and we're saying this is discount. If the market don't hold this level, I'll gladly take this long and take this L, because if we go lower, cool, it's just shorts, right? But I'm betting that it's not, because this low is still intact. This is London's low of the day, right? We push above, and then we come right back down into New York. We tap into this 3-month fib again. We hold the 5.23% weekly projection. We get above it. We hold the 5.1% weekly projection. We get above it. We hold the 5.1% weekly projection off the TOR. Guys, these levels are not made up. These are not my opinion. These are strictly based on ATR and ADR. If you don't know what those are, there is a video in the Discord specifically dedicated on what I'm doing when I find these levels. And every single week we come back on Saturday and we review these levels just to make sure I'm holding myself accountable, right? I'm pretty sure the bullish projection was above the weekly fib, but I'm not even going to go there. I just really wanted to show you guys those levels, right? Because this when I make these top down analysis, if you just go back and watch it, like you'll be way more prepared for the day. Now, on to the mistake that I made, right? So the mistake that I made in drawing my chessboard, roughly I've been getting to the point where the VIX has been so high, the volatility has been so high, I've gotten used to drawing the high and the low of the dealing range, right? But now that with the VIX is slowing down, I'm going back to marking 1 o'clock price, right? In addition to the low of the dealing range, right? Which would have been this level here, right? Hang on, my dog is in. Yeah, but I'm recording. Hold on a second. I can get in. The door was locked. All right, sorry, gang. All right, so if I would have marked the 1 o'clock price here, right, the top of 1 o'clock price usually tends to return back to this area, right? I took these shorts Thursday, and that's why I didn't trade my funded accounts at all on Friday. I literally traded Combine. Thank God I did, because I really wasn't a fan of the price action, even though it did what I thought it was going to do. I just wasn't a fan, right? So I took shorts at 8:40 or 6:45. We got out. I got short basically right at the high, like, I don't know, 320 or something like that. And I got out at like right in the nick of time, right at 5207 or 5208. My best trade on ES ever. So I was really proud of that. Should have probably flipped long and got right back in. But anyway, that's neither here nor there. My point being is that from now on, this is the update that I'm making to the chessboard. And I'll go back to drawing the dealing range only when the volatility gets back above 30. Right now, we dropped below 30. So I'm looking at the ADR. I'm looking at the ADR being a more normal now, right? Like maybe we still be in like that 2-3% days, but the chessboard seems to work a lot better when, or with 1 o'clock price, when the ADR calms down a little bit. Alexis, I see your comment. I'm recording right now. As soon as I get done, I'll address your comment. So give me a second. All right. So coming down to the levels in which we needed to pay attention to inside of the macros, right? So again, I like to review everything. I like to review how I view price, what I did that day, all that good stuff, right? So when we opened the day, right, like I said I was looking for the market to go long, right? But we were kind of in the middle of price for me, right? Like whenever I'm playing my chessboard, like I'm gonna stick to this rule from now on. Like what happens is I try to play the 30-second opening range, but this doesn't work for my system. So instead, I'm gonna allow the range to bring me to the extreme, right? So if I'm in the middle, I'm just gonna fade this. So like, I don't care what we're doing. If 930 is in the middle of my chessboard, because that's my framework, right? If it's in the middle of my chessboard, I'm just gonna wait for us to tap these extremes and either go short into the extremes or long from the extremes, right? So but I ended up not doing that. I got chopped up a lot, right? Like if you guys were in here, it was a Hobbs was long, Hobbs was short, and that's why I really don't like trading in the middle, because from how I like to trade, I just don't feel like I'm at the extreme, right? And I was long, I was short, I was short, I was long. Like I was getting in the washer machine, something I normally don't do. And the crazy part is it was because I was in a combine that was like literally $200 away from being funded. And it ended up being much further away from being funded than that. But I ended up getting it funded, right? So, but ultimately we traded up into 950. Again, I'm going to go over this every single day, because this is, if you follow the market review, right, and you really listen to what I'm saying, I'm giving you the blueprint on every single market review on how to trade the macros, how to trade structure, how to trade the chessboard. So like, it's kind of frustrating when people come in here and they say, well, I don't know what this is. It's like, well, that means you haven't watched one video. Like you cannot watch a market review and come back to me and say you don't know, right? Like you can come back with questions, but to have no clue is just not possible, because I go over it thoroughly every single video, especially on Sunday, right? So when we trade up into a macro, right, I'm looking for that equilibrium, that 10 o'clock time frame to bring the pain, right? And then once we break through these lows structurally, I'm just looking for the market to retest. If you watch the structure video, the previous low to the previous high, 50% is the yellow line. Look at this. We tap the yellow line here, right? Let me turn this magnet off. We tap the yellow line here, 53.26, but where we do it at, we do it inside the macro. Trading up into 950, you could take that short if you want, or you could just wait, let it break structure, and then come back down and just put a freaking limit order right here at 53.26. Put your stop right above 53.40, right? Adjust your size accordingly, because I mean, with this volatility, that's a 14-point stop, right? But that's what's required right now, because that's the entry that I would always take, and that's just the amount of time, the amount of money it costs to take the trade. That's the way I look at it. We break down, we come back, you could add to this entry here, right? Because you would be so confident in this if you just study it. You could add here at 53.25. Now the new stop is here. Why? Because this high is validated after bringing a new low. We drop down even further, take profit here, right? All out down here. Then we come back up here. Here's another entry right off the macro. Guess what? This was a crazy candle. You probably wouldn't have got this entry, no cap, right? But if you didn't take the shorts, guess what? We trade down into my favorite time frame of 10.25. We double bottom down here. You could take longs right back up. What are you targeting? You're targeting the 50, the 30, the 70, the 50, or the 30. That's it. Or you just target the red box, right? Market comes down, we trade down into 10.50. Again, this is a range behavior, right? So this is easy money, right? Like once you identify the highs and the lows, which the lows were coming off of Tokyo and London, right? You just drew a box right here, right? This is London, right? This is Tokyo back here, right? Tokyo was way down there, but at the same time, London right here usually sets the range for New York session, right? Like I can't tell you how many gems are dropped in these market reviews. It is mind-boggling to me that people struggle so much, right? Like, but they refuse to just watch a video. Like the shit just drives me crazy, but it's not gonna drive me crazy for much longer, right? But it's entertainment to me almost at this point. But anyway, we trade down and we put a double bottom in off 1150. This is the entry that I took when I got off stream. I got long 52.71, right? Stops were below 52.60 or 52.58, something like that. I didn't really need the stop because I was never in drawdown. The trade went right to my profit target. I was targeting 53.19. We went right into this area and then like it just went crazy bad. That's all I needed for the account. It was a combine account. I hit the max profit on the day, so I was done, right? And I'm working on my fifth one, so fingers crossed, fingers crossed. But anyway, we continue. We trade up into 1150. You say, Hobbs, well, that's bearish. Yes, it is, but it's following structure. We traded up into 1150, but we got above the previous highs. We traded back down into 1225, a made up macro by myself, but I love it, right? I love the 25s to 45s of the candles. It's when shit happens. It's the 50% mark of the 1 hour candle. If you really think about what I'm doing here, right? I'm marking out the 30-minute time frame, the start of that 30-minute window. Okay. We trade down into 25. We rally up. We break another high. Hobbs, this is bearish. Yes, it is, but it's only bearish inside of the structure. We come back, trade down into the opening price, right? The opening time frame of the 1 o'clock of the PM session. Right at 1:30, I could literally set my clock by this shit. You could literally go look at the market at 1:30 every day, and I guarantee you there will be a move at that time. I guarantee it. I guarantee it. Okay. We come down, we retest these highs, right? We go continue higher, right? The target for me was weekly fib. We failed to get it on ES, but we did end up getting it on the YM. ES or NQ weren't strong enough to get up there, but I think that's going to change going into next week with Mank earnings. But anyway, we get above previous day high, which is the kicker for me going into Sunday or going into Monday. This was very, very important that we traded above the Friday's high or Thursday's high, because that's an indication of what? That's an indication we made a higher high, right? On a higher time frame, right? The daily didn't make a higher high, or the weekly didn't make a higher high, but we're coming. I mean, we had a lot to recover, right? So I'll briefly go over the NASDAQ and the YM, and then I'll talk about the volatility index, and I'll get you guys out of here. For NASDAQ, I mean, you can see it, right? It's the same thing. If I would have moved this chessboard up a little bit, it would have been a perfect tap right inside of New York. And you can see why. Like, look at this is just, like I said, this is a mistake. It's not a mistake. It's just something that I adjusted to with the volatility. Now I'm going to go back to it, right? Or I might just keep it the same all the time, right? Just mark that 1 o'clock price no matter what, and then engulf the dealing range. I think that's what will be the final adjustment that I'll make. But if you look, NQ, tap right into it. Like, you could have set a clock by this, right? You could have just put a limit order here and said, okay, I'm going to risk this and just see what happens, right? Do it on whatchamacallit, do it on practice, right? Like, do it on a practice account, right? Just to see if it works. Like, see if I'm crazy, right? If I'm wrong, you don't lose anything. But look for 1 o'clock price, draw a freaking line, draw a box at 1 o'clock, look for the highest point of the day in the PM session, draw a box, and then come back and holler at me and see if it don't work, right? If I'm wrong, hey, you ain't losing nothing, right? But if I'm right, just let me know. Let me know. You know what I mean? I know I'm right. You don't really need to let me know. I'm just saying. But all right, so then we come up here to, this is the divergence, right? NQ did not break technically above the previous day high. But if we take a closer look, right, the high of this candle is 873. Previous day high is 871. I know that seems subtle, but I'm telling you it's on purpose, right? No, not only does it think, it has bears thinking, oh, yeah, we're still good, like we didn't break the highs. Like, nah, we did. And more importantly, the part that the bears aren't really paying attention to, because they're probably still trying to figure out if they're going to be in profit, is the fact that we not only broke the high, but we consolidated at the high. This is a very bullish sign that the market's getting ready to break out, right? Whenever we get this tight consolidation, you see 1 o'clock price and 3 o'clock price are right next to each other. Whenever we get those, this is 1 o'clock, this is 3 o'clock, right? Whenever we get this tight consolidation inside of an up or downtrend, tight consolidation at the highs and an uptrend, tight consolidation at the lows, is what you've been seeing this entire downtrend. Every morning when you wake up during this downtrend and we're at the lows and you're trying to go long and you get smoked, it's because we're getting tight consolidation at the lows. Well, now, Eureka, we're getting tight consolidation at the highs. This is bullish. This is not bearish. This is bullish, right? So look for either, a potential gap up in Tokyo, maybe gap down to this level. I doubt if they gap it down. I would be shocked if they gapped it down, to be honest, but we'll see what happens. I expect that these 1 o'clock lows will stay in place, right? The daily fib will hold, and then we'll go higher, or we gap up, fill the gap, and then go back up, right? So as we start this uptrend, don't be that person when we were up at the highs, you were looking for longs, and now we're down at the lows, you're looking for shorts, right? Just go with the trend, right? And the trend will lead you in the right direction, okay? Now, the Dow Jones, in my opinion, as per usual, does what it's supposed to do. It's true price action, right? You can see, again, this was 1 o'clock price. Had I marked it, right, this would have been probably a pretty good entry here. So let's go to the 15-minute. 1 o'clock price would have been right here. Right there, okay? So not quite spot on for the Dow, but I mean, Dow was really strong, so it's all good. But again, 1 o'clock was just a continuation of London, right? So we had 1 o'clock tap in during Tokyo right there, right? We tapped into 1 o'clock price during Tokyo right there. And then we came down and London put us in a higher low. Therefore, New York ended up sweeping London and couldn't take out Tokyo. Therefore, it could not step back into 1 o'clock price. And that's a reason, if you think about it, we couldn't go lower than the other instruments. So we ended up going higher than the other instruments, right? Like, just think about that, right? Like, that's the reason why we didn't tap into 1 o'clock, because we were going to go higher. So we traded above previous day high very cleanly. And then we traded slightly above the weekly fib. And now we're consolidating at the highs. 1 o'clock price, 3 o'clock price. Look for a gap up, right? Fill the gap and then go, right? Targeting this in wall on Sunday, right? If I see that and I'm available to trade it, I'm going to take that trade, because I already know when we start to reverse, this is how we start to reverse, right? Maybe I'm wrong. We'll see. You'll see more on the top-down analysis. All right, so looking at the volatility index, you can see over the day, I mean, look at all of these bearish wicks at the highs, right? I think the volatility index had enough. And more importantly, you can see this, right? You see this, right? And then you see this, right? If you know what this is, you've been in this Discord long enough, you know that this is our pattern, right? This is our head and shoulders pattern. This is a reversal pattern, right? It might be night for the VIX. If we flip this upside down, you can see it even better, right? Once the VIX creates this type of formation on a higher time frame, i.e. the 4 hour, then it's probably looking to target this neckline down back to the 19s, right? And you guys know how quick this VIX can start falling. So if we get back down to the 19s and we can't hold, we're going back to the 16s, and then it's going to be back to all-time highs, right? So we'll see what happens. I'm looking for this to drop aggressively in the month of April. I said it the first week of April. I said there's an 80% chance that April is going to be bullish. So I'm not going to bet against those statistics. So I'm still bearish. I just think April is going to be a very bullish month, but we'll see if it gets above March. If it doesn't, I'm going to be right back being bearish in May. So those are my thoughts on the market, guys. Like I said, longer review on Sundays or on Saturdays because I have a lot more time. I really hope this is helping you. But that's all I have. My name is T Hobbs. This is the Trader Shop. And I'll catch you guys on the next one, man. Peace.